Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at crypto.com. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, if you haven't seen the previous update, make sure to check that out before watching this one. It's going to be in the top right-hand corner of the video. And also, I have two donation links down below in the description. If you want to support Ukraine, you can do so by going to one of the official websites. You can support the Ukrainian refugees, Ukraine's military, or both if you want to. Thank you all for the support. Let's get straight into the video. So jumping into the daily chart here, as you can see, we have a Fibonacci retracement set up from the swing high to the swing low over here in January of this year. This gave us the 1.618 target at 16.63 cents, and we had our 2.0 target over here at 10 cents, almost 11 cents, I should say. And we have landed there and we have created a nice support level here. And I had these targets long before we ever got here, ever since we lost this low, which was the swing low of the Fibonacci retracement. Ever since we lost that, I was able to see these targets because I knew that once you lose the first fib level, your technical target is the 1.618, and you can see that we did capitulate to the second level, which happens quite often as well, that we do lose the 1.618, we drop to the second fib level. Now zooming in a little bit here, I do want to show you the 20 EMA and the 55 EMA. So the 55 EMA is the red line over here, and the 20 EMA is the yellow line over here. By the way, this is the logarithmic chart, so make sure you have your log scale on. So we are attacking the 55 EMA right now. So this pump that we're seeing in the markets is just temporary, in my opinion. This is us, simply creating a lower high. That is all, in my opinion. Now, if we break through the 55 EMA, I would look for a back test of resistance of the 1.618 level here, because we did lose this level, but we never had the back test of resistance. So you came back down here, consolidation, break to the upside, back test of resistance. You create a lower high, and then you continue to the downside. You either go all the way back down to the second fib level potentially, or you go even lower to the 2.272. Depends on what Bitcoin does. But yeah, that's just what I think. So if you want to swing trade this bad boy, taking some profits at the 55 EMA and at the 1.618 is a great and a smart thing to do. I'm swing trading a lot of altcoins myself, along with my patrons. My Patreon is down below in the description if you want to get low cap gem calls, trade alerts, TA, exclusive TA, and a whole bunch of stuff, and you want to trade with me, then feel free to check that out. And if you potentially take profits here and here, you can buy back in at the 20 EMA on the daily chart just to be safe, because you're starting to get a bit overextended. Okay, you're starting to get a bit overextended to the upside. So we're going to look for that back test of the 20 EMA. And if we do create the bullish cross here, that is a nice signal, but that is still not the most important signal in my opinion. So let's bring out the daily RSI. I do want to show you this support trend line over here, this ascending support trend line that we've hit multiple times here, almost 3 times, once in May, almost a second touch in May. Then we did see a bounce in June. And once we see the next pullback and the next potential capitulation, this is where we may land. So you want to have this RSI in sights. You want to have it on your chart so that you can, see where the how far we are from the support. But if you see us touch the support trend line, then make sure, or not make sure, not a financial advice, but this would be a good point to buy some more tokens. Now that's regarding the daily chart. Let's switch over to the weekly. Moving over to the weekly chart, I want you to take a look at the 20 EMA and the 55 EMA here. We did create a bearish cross, which was the confirmation of the bear market. And after that, we did see another drop from 17.5 cents all the way to 11 cents, basically on the second fib level. We did have a wick below 10 cents over here. and that was a very good buying opportunity. So if you had this Fibonacci on like me, and you did set some buy limit orders on the second fib level, then right now you're up around about 26%. So we have our 1.618 target, but I want you to target the 20 EMA on the weekly chart as well, because just like on any chart, once you are in a downtrend, you do backtest the 20 EMA as resistance, and you get suppressed back down until you break it and backtest it as support, and you get the bullish cross instead of the bearish cross that you got here. So you need to see something like that, and that would be your bull market confirmation. So if you want to be safe and you want to, play it extra safe, obviously you can just wait for this indicator on the weekly chart. You can wait for the bullish cross, but until that happens, we're going to see an uptrend start, obviously. So you're going to miss out on some, gains over here, but you're going to be you're going to be set for the gains that are to come after the bullish cross, of course, but you will miss out some gains, but this is the safer way to do it. Okay, so yeah, 20 EMA currently sitting at 22.5 cents. That is a potential resistance level that we got, and so that's something to target. Also, make sure to target this white trend line. As you can see, it does touch the wicks over here on the weekly chart, but on the daily chart, the candles do close below this level here. So this is a pretty important resistance level that we have. We did wick to this area in May once we started capitulating. So this is a pretty important resistance level. I'm going to go to the daily chart to show you once again. But here on the weekly, as you can see, we dropped all the way down, almost getting oversold, and we have started recovering from there. So that is a very, very good sign. And again, I do think this is us simply printing a lower high. We're going to come up here, potentially do something like that, and then we're going to come back down. So that's going to be a lower high. Because the markets aren't bullish, the sentiment isn't bullish. This is simply, simply market makers and exchanges trying to liquidate the short positions, and we want to get enough long positions opened. Then we dump back down, we liquidate the long positions, and yeah, that's just how I see it personally. Not a financial advice, and I'm probably going to be wrong on this. But going back to the trend line that I was talking about, so you can see you do have a wick to this area once, 2 times, 3 times. You have a wick above, and you do run into it as resistance over here. You do run into it as resistance over here, and potentially you can run into it as resistance one more time in the next couple of weeks, potentially. Depends on how strong this relief rally is going to be. So yeah, that's just something to worry about. Obviously, we are very overextended to the downside. As you can see, the 20 EMA and the 55 EMA have a huge gap in between them. And usually when that happens, you do see these relief rallies, because you want to get the EMAs closer together, but nothing can go up forever and nothing can go down forever. So at some point we're going to reverse into the bull market. I just don't think that this is the reversal into the bull market. But let me know what you think down below in the comments. If I missed out anything important on the charts, please let me know as well. I'm going to catch you in the next one. Feel free to follow me on Twitter, and feel free to check out my Patreon down below in the description. Goodbye and good night.